Welcome to Liquidity Provider, the podcast where we break down the real math behind LP profit and loss. Today's episode, what the 266% APR on Circle tells us about liquidity provision in 2026. Circle's stock is yielding 266% APR for liquidity providers on D-Gate this week. That's not a promotional number. It's what actually happened when concentrated liquidity met post-earnings volatility in a newly public company still finding its price. Let's talk about why this matters, what it reveals about how markets work, and what it means for people providing liquidity in DeFi. Thanks for reading. Subscribe for free to receive new posts and support my work. The Circle story, why volatility, why now? Circle went public in mid-2025 at $31 per share. It's the company behind USDC, the second largest stablecoin by market cap, which means its revenue model is directly tied to stablecoin circulation and interest rate spreads. When rates are high, Circle earns more on reserves. When adoption grows, circulation increases. The stock ran up significantly post-IPO, hit highs in June, then crashed 70% as investors recalibrated expectations around regulatory uncertainty and competition from Tether. Now it's trading around $90, still well off the highs, but recovering. Last week, Circle reported Q4 earnings that beat analyst expectations. Stablecoin circulation was up, revenue beat consensus, and the market responded positively. The stock surged 13.66% in 24 hours following the report. Here's what makes this interesting for LPs. Circle is still in price discovery. It's a young public company without decades of trading history. Every analyst upgrade, every regulatory headline, every shift in crypto adoption sentiment moves the stock meaningfully. The bid-ask spread widens, traders take positions, and volume spikes. That volatility isn't noise. It's information asymmetry being resolved in real time. And when you're providing liquidity in a concentrated range, that resolution generates fees. How concentrated liquidity amplifies yield. Traditional AMMs, automated market makers, spread your capital across the entire possible price range, from $0 to infinity. That's capital inefficient. Most of that liquidity never gets used because prices don't move that far. Concentrated liquidity, introduced by Uniswap v3 in 2021, lets you focus your capital in a tight band around the current price. If Circle is trading at $90, you might provide liquidity in the $81.99 range, plus 10%. If the price stays in that band, you earn fees as if you had 10x or 20x more capital deployed in a traditional pool. That's the key insight for today. If you want to go deeper, the full analysis is on our Substack at liquidityprovider.substack.com. If this was useful, follow the channel. New episode every day. See you tomorrow.